How's it going, everyone? It is Tuesday, January 30th, 2024, and this is the video for today. So before we get into it, quick housekeeping note. I will be out for the rest of the week. I'm going to a wedding. So this will be the last video of the week, and then we're going to review all the picks from this week. We'll look at all the news, what happened this week, what changed, what didn't change, and we'll look at all of that on Monday. So flying blind next couple of days. With any case, let's just get right into it. So I'm going to walk through the whole buys here, where we are right now, starting from our long-term fundamental, then our long-term technical, then our short-term technical, and then what's happening in the market today. And COP, which is a trade I'm in right now. Why am I taking this trade? So long-term fundamental, okay? What is going on? Well, we know that inflation has been coming down. We know that the market has been pricing in rate pauses and rate cuts for Q1. We know that the economy has still been pretty strong, so the chance of the soft landing has increased. We know that AI is a big factor, and a lot of money is being poured into chips and semiconductor stocks. So that's kind of what's happening at a macro level. That's really been moving the market and the bottom line. There's a lot of other stuff. There's some Chinese Evergrande news. There's this Red Sea stuff. There's all these random bearish headlines that kind of get circulated in any sort of market pause. But those headlines get very quiet when the market's doing quite well because they just don't have any explanation for this. So the macro conditions are suggesting that inflation is coming down and we have a strong economy. Yesterday, we had a big pop in the market. And the Treasury announced that they will be borrowing less, which is going to push the bond yields down and more money is going to be flowing into equities. So there's some positive macro tailwinds here on this side. We're seeing the story change from what it was back in 2021, 2022, and early in 2023. There's no credit crisis as well. So very bullish, I think, bullish fundamental backdrop. Now, obviously, the technical backdrop here is also very bullish. And I mentioned this in many videos. We had some weakness in here, September, October, a little bit longer than usual. Usually we get that bounce early in October, but from November to December, we got good economic news. We got seasonality. We got good earnings as well, things like that. Good values for institutions to get in on. And the market has been soaring ever since, not really pulling back. This was the only deep and decent pullback. We're above all the SMAs, we're above EWQ, we're making new all-time highs, very few retracements. The volume was started low, picked up over here, right? And it has these spikes and these pockets, and these spikes are usually these news events or these breakouts over here that happen on high volume. So it's not going to be the high volume in the whole move. It'll be high volume initially, and then the volume will taper off as the move begins to climb higher. So we know that we are very bullish on the long term. This is pretty much as bullish you can get in terms of a market backdrop, right? You really can't get any more bullish than this. There's been no deep retracements. There's been no fucking waffling around. It's really, really nice. So now we zoom into the short-term market backdrop over here. We had this breakout last week, and it's had follow-through. We've been climbing higher, made a new all-time high, compressed a little bit. Look at this, lower lows, and then we broke out. Yesterday, I actually got the market wrong. Over here, I didn't think we were going to get the breakout before the mega cap tech earnings. Turns out we got this breakout here. Here's where the positive Treasury news came out. Soared higher. I mean, look at this. We closed here at 488. So this move here, low 487. This is maybe like a $150 move-ish. And then we double that. This is strong buying and strong price action here. And so far, we're holding these gains. We're digesting them. Will we break out today? Again, I don't know. There's a lot of mega cap tech earnings today. And if I look at the market components, which I look at every day, I look at what sectors are strong or weak. How is mega cap tech doing? How are flight to safety assets doing? Mega cap tech is pretty neutral, and there is a little bit of selling, a little bit of profit taking before these earnings, some their institutions are de-risking a little bit, but flight to safety is not super high. VIX is pretty low. Utilities is pretty weak. There's not a lot of money being poured into those flight to safety assets. So flight to safety is not strong, which is mildly bullish. And if I look at what stocks are on heavy buy and heavy sell, this is a really easy trade. There's a little bit more stocks here now, but earlier today, when the market was over here, it was fairly even. That's when I did my analysis. So the market components is not bearish. It's a little bit neutral, okay? So it's telling us that there's not going to be any go-go gangbuster move until tech gets a bid. But we also know that it's not super bearish. And given the strong long-term bias, given the shorter-term bias, which is both bullish, I'm looking to get into strong stocks when the market's flat and they're not making moves. And I'm going to do small size and I'm going to set passive targets and take these small wins. I then also identify support and resistance. So I know support intraday is this level, resistance intraday this level. We got to break out of this range to get any sort of meaningful move or meaningful bias, which I don't know if that's going to happen. It could be a pretty dead day. Let's see. We might need some news to push over the edge, and we need volume. Now look at the price action for today. I zoom in even more, right? We ended up here, a slight gap down, but to me, this is a fairly flat open, to be honest. There's not a lot of movement. You can see it just waffling around. I mean, to call this price action garbage is an insult to garbage, right? This is just complete terrible conditions, low volume, choppy things. You see, though, that there's lots of tails. That's what I'm noticing. Lots of tails. We're not able to push this down, which means that there are buyers here at this breakout. Maybe shorts who think that, yeah, we got squeezed out here trying to pick a top, flush this move higher. Buyers maybe want to get in at this price on the stock, on the market. So I view that as mildly bullish, but we needed some move up here. We had an LRSI and D1 cross, and that's when I made my entry into my stock. So I looked at heavy buy first. That's the first thing I look at. And then I see what stocks are looking good, and I see what sectors are strong. I saw that finance and oil were very strong today. So those are some sectors that oh my gosh, that were doing well. And here's where I made my plan, and I think I just took profits on this trade. All right, so I saw ConocoPhillips. I saw it right here. Okay, now I knew that oil was strong. The ConocoPhillips daily chart, pretty terrible. Oil is an awful daily chart. I mean, it's so newsy. It's so choppy. I really would not do anything other than day trade it. But it has pockets of strength. And on days like this, it can trend. So what I liked about ConocoPhillips, the daily chart, not great. But on the intraday chart, there is an opportunity. So we had this compression over here. There's my alert. We broke through the SMA, tested it, and we made a new high. Okay, so to me, that is a decent confirmation of the SMA while the market was doing absolutely nothing. So here is COP. Here is COP. Oh my gosh, at 1120. Here is the market at 1120. Okay, look at this setup. We got LSRI crossing up. We got a little bit. We've had some support hold over here, so we'll probably test the upside of this channel. 1OP is crossing over. COP is really strong. Nice volume. Good steady price action. So if my size is 10 divided by the ATR, that would give me about 4 to 5 shares. So I bought 2 shares of COP, and I had a passive profit target of a quarter of this ATR, which is 50 cents. Okay, so I got in at 112.57, and I had a target of 113.07, and I just hit that target. I actually blew through that target. Now it could keep going, but you notice that we have this 50 SMA coming up over here. Could it break through the 50 SMA? Sure. I have to lean really hard on that stock, and it has rejected in the past. Rejected pretty hard. I also need a strong market tailwind. I might get that. We have no inclination we're going to get that. So to me, I said, hey, I'm going to take profits into strength. I'm not going to think twice. And I took a nice 50-cent move on a $100 stock. I'm happy with that. You know, that's a nice win for today. So day trading, passive targets, small size, take the small wins. That's the opportunities that I see on this day, and COP held up pretty well. And this was my stop right here, this low 112.11. So If we broke down through that level, we'd have to break through the SMA, which is unlikely because we confirmed. So I had a lot of things that went in my favor for this trade. And, in and out, nice profits. That's the trade I like. It worked immediately in my favor. Now, on this bearish hammer here, I'm not letting this go against me, right? I'm going to get out of this trade. So that's kind of how I set up this day trade over here. I'm looking for, again, short opportunities, passive targets here if you want to trade. If you don't have the right setup, you should err on the side of not trading. So this might be my only trade today. I mean, I don't know if I'll get a better setup later in the day until we get a breakout. All right. So let's review the picks from the prior videos over here. All right. Good old HLT. Okay. Look at this. Look at this guy. I mean, come on. Look at him. Beautiful. Okay. HLT pulled back yesterday, rallied up with the market, broke out today, and is soaring up when the market's doing absolutely nothing. So HLT continues to grind up higher. I believe we took it on the, let me check here. We took it on 125. So if you got it in at 191.77, I would take profits here, I think, ahead of earnings. Could it still grind up? Sure. I got a nice full ATR move. I'm taking profits, and I'm booking HLT as a win. I didn't take the trade myself because I had some other trades I wanted to manage. But that's a winner right there. Ally is compressing over here. You see it's finding a little bit of resistance at this 37.80 level. So just something to watch out right now. It couldn't rally super high with the market. So what I would do is just set an alert over here on the stock. Again, it's a grinder, right? It doesn't make these big moves. It kind of grinds up. So if it's starting to stall for another day or two, I could see taking a scratch here in Ally, depending on how you got in. If you got it on LRSI alert, these scratches can become wins, right? These LRSI alerts are really, really nice to get. Again, if you kind of rub up against that resistance over there, you're able to get a small win instead of a scratch or a small loss. Okay. And let's look at snow. So, oh, this might take a little while to load. It always gives me one of these things that take a little while to load. Snow is down a little bit today, so we have a PCS, which did not fill yesterday. We have a good chance of having that PCS fill today if snow is down a little bit, right? The IVs go up. The delta goes down. We're a little bit closer to that strike price. So we will check the snow PCS in a bit while this loads. All right, once snow loads, here we go. So let's see if this filled in over here. Nice. Okay, so I am in snow. I sold the 185 put, and I bought the 180 put for $1.10 credit. Okay, which means, right, snow would have to break down below this level, this horizontal resistance right here at the gap. If it breaks through that, I have a super clear exit point. 180 would be like ultra safe, and snow is a high, like this stock is a, you got to be prepared to take some heat on snow. It's not the easiest stock. Not the easiest stock. This is the March 1st trade. Oh, I made a mistake on snow. Look at this guy. 1228. Yeah, above earnings, so it's too good. So I need to get out of the stock. All right, so I'm going to try to get out of this stock for a debit because I have the wrong earnings. All right, so snow, terrible pick on my part. Let's look at GS instead. GS is hitting this resistance over here. I also said yesterday, and this shows the newbiness of myself, that it would be a good weekly at the money. The problem with the weekly at the money is that we had this bullish catalyst here, but no bullish catalyst after earnings, which is what you want. It's because it's a neutral catalyst after earnings, the price action doesn't really favor, well, the price action favors weekly at the money, but the bullish catalyst does not favor the weekly at the money. So, snow, terrible pick. I'm going to count that as an L because earnings date was not what I saw it was. And Ally is still open. So if you can get out for snow and a scratch or an L, that is fine. There's a wide bid-ask spread, so there's a good chance on any move higher you can take a small profit on that if you got in at a high credit like I did. So that's the thing with the PCS is you got to check the earnings date. And sometimes I thought I have it, but I'm wrong. I'm human. I have time to get out of the trade. I'm not panicking here on snow. All right. Let's give a pick for today. So COP was my day trade pick, but I do want to see if there's another day trade pick that we can find. So I'm going to use my bull day trade search here. Look at stocks that are making new high of the days. The move is you're a little bit late in the move here because we want to get it a little bit closer in this action at 11:20 when it took COP versus now when we're close to the high of the day. We have a good chance of rejecting off resistance and SPY is breaching through the trend line. And cost is breaching through the trend line. Cost is making a nice move today. Right? I'd called out cost over here when we got that little bull flag, and it's confirming very, very nicely. Really steady price action on this. All right. So, while the market does this, let's just give what my take is going to be on the FOMC and the earnings and what we want to look for in those, because I think that's going to be the most important. I don't, versus me giving a pick, I don't think I would do anything more than a day trade. And by the time the video comes out, you just have to see the process. So I think I'm going to have COP be my day trade pick for today. I'm not going to give a swing trade pick because, there's a lot of binary news coming out. So first thing with mega cap tech earnings, we got a couple of big earnings coming out. Meta tomorrow, and we could look at the market view over here to see the pre-earn options. Starbucks is big. BA, the devil stock, is coming out. Google, Microsoft, AMD is also pretty big, okay? So what we want to see here is how do the Magnificent Seven net out in earnings reactions, right? So if you have all 7 mega cap tech earnings, right? So we know Tesla was negative. If all the other 6 have positive earnings reactions, then that is generally pretty positive indicator for the market because they make up, I think 25% of the market cap. It is really, really big. NVIDIA doesn't report earnings until later, about a month later, so not a little bit later, so we can't look at that immediately, but Microsoft, Google, AMD is going to be pretty important. So first, how do all of them net out, right? If we have, 4 negative, 3 bullish, right? That's a little bit more neutral. If we have 5 bullish, 2 negative, then that's a little bit more bullish. Okay, second thing is with the FOMC statement. Now, the first thing is just what are they going to do in this meeting? The market has priced in a 98% chance of a rate pause and a 2% chance of a rate cut, right? So it's very, very likely that they're going to pause this meeting. If they hike, which is a very low tail, it's kind of a tail end event if you think about a distribution. If they hike, definitely would be a bearish surprise for the market. Asset managers would kind of adjust their positions. I don't think it would cause any major selling, but it would start probably a bit of a pullback. But highly likely we're going to pause. The bigger thing is, are we at the terminal rate and when are the rate cuts going to happen? The market has priced in that this is going to be the terminal rate. The chance of a rate hike is 0 for the rest of the year. The chance of a rate cut for the next meeting in March is 37%. The chance of a rate cut happening by May is 87%. So the market's saying, hey, it's very highly likely that we are going to cut rates. We're going to see rate cuts by May. At least 1, maybe 2, okay? But at least 1. Now, the Fed rhetoric is a little bit different, right? They have been hawkish on inflation the whole time. They do not want to they do not want to ease rates and have inflation come back, right? That is their worst case scenario. So based on their rhetoric, which is cautiously hawkish, they would rather keep it at the terminal rate rather than ease too early. So if they say, and if their rhetoric implies that they will keep rates longer, then the rate cuts are going to be pushed out later. If those rate cuts are pushed out later, asset managers are going to be a little bit more passive, right? Because the longer we're at this terminal rate, the more heat the companies take, and it still increases that chance of a soft landing. As soon as the rate cuts start to happen, the soft landing chances go up, and the economic recession chances go down. So from an institutional asset manager perspective, we want to see rate cuts sooner, right? We can borrow more money. Companies can borrow more money. It lubricates the whole financial system. Cheap debt allows companies to act faster, to buy resources, do all these things, acquisitions, M&A activity, IPOs, all of that stuff is accelerated when we have cheap credit. So that's what's going to be the real key. When are we going to ease rates? And is this the terminal rate? From my perspective, I think it's highly likely that this is the terminal rate, barring some huge spike in inflation. If we have a huge spike in inflation, then the Fed may increase that terminal rate. But I believe we're at the terminal rate. The question is, how long are we going to stay at this rate before we come down? Right now, the market thinks by April, it's definitely going to come down. After the Fed meeting, it could be the same. It could be later. It could be the Fed might say, hey, we're not going to think about bringing this down at least until June or July this summer, right? So that's what I would watch for the FOMC. The final thing is just like ADP and unemployment. So we just want to make sure that they're low. Unemployment's been around this 3.6 to 3.8 level. It's been very, very steady. JOLTS came out this morning, beat expectations, so there's still high job demand. We also want to see the average hourly earnings stay pretty low, below 3%. Wage is a really big input component, pretty much the biggest cost for every company, right? How much you pay people. So we want to see that pretty low, and we want to see ADP have some bullish numbers, right? We want to see strong employment data from the ADP reports. So if those are all suggested to be true, then we know that the economy is still pretty healthy. We also have ISM manufacturing, which is not, as important. It's been a little bit in a contraction territory, but if that's positive, it's still a nice little boost. So that is it fundamentally for this video. My pick of the video was COP, which I'd gone over. Over here, I would be being a little bit cautious. I look to take profits. If we break out, we break out. If we don't break out, we don't break out. And we will come in on Monday, and we will reevaluate how earnings looked, what the FOMC statement was like, and what the market is, or how the market reacted to those from there.